Hello everyone. In this video, we'll discuss about HFCL stock. Over the last 4 years, the HFCL stock has given 15 times return. So if you see the stock price in the year 2020, the price was approximately 9 rupees and recently it touched a high of 135 rupees. But over the last 2 weeks, the stock has fallen by approximately 15%. Additionally, if you see the lifetime high of the stock, the lifetime high of the stock is 2500, which was formed in the year 2000. But after a year only, the stock price crashed by 98% to 60 rupees. The reason behind the sudden rise in the stock price was Ketan Parekh scam, where he was able to pump the stock price with the help of circular trading. But once the scam was exposed in the year 2001, the stock price crashed by 98% to 60 rupees, destroying the investors' wealth by 98%. So in this video, we will discuss if HFCL stock is still a multi-bagger and will it reach to 2500 or will it again fall to 8 rupees. Please note that the video is only for educational purpose and do reach out to your financial advisor before taking any decision. This slide gives the agenda of the session, and during the course of the presentation, I will give you complete understanding about HFCL stock, and I request you to watch the video till the end because I will be covering few of the important pointers throughout the presentation. And once you watch the video throughout the end, you will be able to take your own decision. First of all, let us discuss about the latest business update. HFCL is planning to give less focus to railway segment, and what they have said is defense sector is expected to pick up and they are seeing huge demand from the defense sector. Additionally, HFCL is planning to have a capex of 1400 rupees over the next 3 financial year, which will lead to the increase in the revenue from 4500 crore to 10,000 crore with a CAGR of 31% over the next 3 financial year. And they have also revised their strategy where they are planning to focus more on the high margin project, and this might lead to the temporary degrowth in the revenue. But over the period, they are thinking that the order intake and the revenue growth will stabilize because they have a huge order book. And they've also said that the working capital pressure will reduce. Because of the growth in the earning and easing working capital, the cash flow will increase. So considering the business update, all these things looks rosy. But is everything rosy? We'll discuss the entire thing over the course of the presentation. Next, let us discuss about the industry overview. HFCL cater to 3 different industry: telecom, railway, and defense. And out of all these things, telecom constitutes 92% of the total revenue. Coming to the opportunities, India has a total population of 140 crore, out of which they have the mobile connection of 115 crore. So there is a huge market, and apart from that, it is the largest market globally. In terms of the growth in the telecom sector, it is expected to grow at a 13% CAGR. And because of the things like last mile connectivity, 5G rollout, and FTTH, the global and domestic demand looks promising. Additionally, the increase in the data center will impact the revenue in a positive way. Things like 5G rollout in the tier 1 cities, an expansion of 4G in tier 2 and tier 3 cities, and BharatNet phase 3 project will lead to increasing demand of the telecom transmission products. Globally as well, US government is planning to give a subsidy of $73 billion, which will again boost the demand. In terms of defense sector as well, there is a strong demand from the Indian defense sector, and also India's government push for the Made in India will impact the industry in a positive way. Apart from that, the ban on the Chinese telecom products by the US and the European countries have created a new opportunities for the Indian companies. And last but not the least, India has emerged as cost effective defense supplier for the global demand. High regulation and the capital intensive business are the two major risks for the industry. Because of high regulation, there can be any adverse government rules and regulation which can impact the industry in a negative way. These are few of the major players in the industry. Next, we'll do the fundamental analysis of HFCL. As I explained earlier, 92% of the revenue comes from telecom segment and remaining 8% comes from defense and railway. They are India's number one optical fiber cable supplier. They have presence in 45 plus countries and they have 5 manufacturing facilities in India and 3 R&D centers. Out of 5 manufacturing facilities, 2 of them are in Hyderabad, 1 in Chennai, 1 in Goa and 1 in Tamil Nadu. They are also growing their presence globally and they are setting up their OFC manufacturing plant in Poland. Currently, the exports constitutes 29% of the revenue, which they are planning to increase to 70% by the year 2028-2029. And this will impact the margin in a positive way. Companies like Wipro, Qualcomm, and Capgemini are few of their technology partners. In terms of customers, they have the customers across different geography and different verticals. In telecom, they have the customers like Jio, BSNL, Vodafone, Airtel in India. And globally, they have the customers like Nokia, Orange, Virgin, etc. In defense, they have BEL. Next, let us discuss why HFCL. The first and foremost is they are the market leader in the domestic supplier of optical fiber cable, and anyone would like to always go with the market leader. Their focus on the vertical integration resulted in consistent supply chain, because of which their dependency on the other companies has reduced. And because of their focus on the R&D, they're always ahead of the industry. And they have global presence in 45 plus different countries and 100 plus clients globally. Given they are in the industry for more than 4 decades, they have a strong B2B relationship with different clients and technology partner. And in B2B sector, the business relationship plays a major role. And with respect to their board and management team, almost all of them are having 3 to 4 decades of experience, and this is definitely a positive news. Right now, they have an order book of 7,685 crores. So coming 3 to 4 years looks promising for the company. The last and the most important is end-to-end network solution provider. And any company, when they reach out to HFCL, HFCL is able to provide all the different needs that the company has. And this is what I was saying about. They have a very strong leadership. When it comes to board member, if you see, almost all of them are having 3 to 4 decades of experience. When it comes to management, here again, if you see, most of them are having 3 to 4 decades of experience. This slide gives an overview of their product portfolio. In networking products, they're empowering global telecom companies with a wide range of new age products. In defense, they are the innovator in Indian defense technology space, and they are working on made in India products. In passive connectivity solution, they are supplying high quality compatible passive connectivity solutions catering to high speed networks. In aerospace and automotive, they are the supplier of highly specialized custom designed cables for the aerospace and automotive sector. Few of their recent launches includes electronic fuses and night vision devices. And apart from that, the product under development includes drone detection radio and software defined radio. In terms of competitor, HFCL has a competitor like Sterlite Technology and Tejasnet. And one good thing over here is this industry has a strong entry barrier in terms of high capital requirement. And apart from that, this industry runs because of the strong B2B relationship. And HFCL, given they are in the system for more than 4 decades, they have a strong relationship with Indian and overseas telecom companies. They have set up ambitious target for the financial year 2027, where they are planning to increase the revenue from 4,500 crores to 10,000 crores. EBITDA margin they are planning to improve from 15% to 18%. ROCE they are planning to improve from 14% to 20%. And as I said earlier, they are planning to move to product-led revenue. And right now, the product-led revenue share is 42%, which they're planning to improve to 70%. Same way, export-led revenue, they're planning to increase from 11% to 40%. And this is how they plan to achieve all the things that I mentioned in the previous slide. They will achieve it through innovation, product-centric approach, international expansion, and diversification to defense segment. And by financial year 2027, they're planning to get 10 to 15% of the revenue through defense segment. They're also planning to strengthen their backward integration through reducing dependency on external supplier for manufacturing of optical fiber cable, which will lead to higher quality product and also better margin. Over the last 4 financial years, the revenue from the private sector has improved and has improved from 51% to 74%, which is a positive news. Same way, the revenue from the export segment has improved from 4% to 11%, and product led revenue also has increased from 27% to 42%. And because of this product led revenue, the margin will improve and also the working capital cycle will improve. They have 3 dedicated R&D centers and 300 engineers so that they can remain ahead of competitor. In terms of global opportunities, they have approximately 319 billion USD total addressable market in OFC segment. In telecom, they have 614 billion USD. In defense, 319 billion USD. And in railway, 5.2 billion USD. Over the next few slides, we'll discuss about the potential in all these 4 different segments. In OFC, they're planning to target 2% of the total addressable market, which will amount to approximately 48,000 crore market potential. And if you see the current revenue of the company, it is 4,800 crore. So you can assume the potential that this industry has. On 5G global opportunities, these are the different products that they have in this product segment. On 5G domestic market opportunities, few of the growth drivers includes increase in data consumption, where by the year financial year 30, the smartphone users will consume 65 GB of data per month. Additionally, Indian government is planning to roll out public Wi-Fi services, which will again be a positive for the company. And also, like we are planning to open 45 new data centers by the end of year 2025. Domestic opportunity in the telecom, excluding 5G, includes BharatNet project, network expansion by BSNL, and high bandwidth demand resulting into high fiberization of towers. Few of the growth drivers in defense sector includes import reduction from 65% by financial year 2028 to 30% by financial year 2032 because of the initiatives like Atmanirbhar Bharat and Make in India. Additionally, Government of India has listed out 310 items which they are planning to make in India. Railway constitutes only 2% of the company revenue, and these are few of the growth drivers in the railway segment. Next, let us discuss about few of the challenges. The global telecom equipment market is highly competitive and price sensitive. So it will be really difficult for the company to maintain the revenue growth along with profitability. And also, as explained earlier, the global defense market is highly regulated and getting approvals from different authorities might be a challenge. Next, we'll discuss about the financials and valuations. In terms of market cap, the market cap of the company is approximately 16,000 crore. The stock PE is 50, which is a bit higher than the industry average. ROCE and ROE is okay, it is not good. And management has guided that both of them will improve over the coming years. Debt to equity is also below 1, which is definitely a positive sign. One thing to worry over here is the placed percentage. Of the overall holding of the promoter, approximately 44% of the promoter holding is placed. Over the last 4 to 5 financial year, the debt to equity ratio has reduced and current ratio has improved, which is definitely a positive sign. Although ROCE and ROE have declined, and management is quite confident that this will improve over the coming years. Currently, the order book of the company is approximately 8,000 crore, which is definitely positive. In terms of sales, the sales is kind of stagnant over the last 4 financial year, and same is the scenario with profit as well. But if you see over the last 4 financial year, the stock price has jumped by approximately 15 times. And the main reason behind this is the higher order book, where the order book is approximately 8,000 crore and the revenue is only 4,000 crore. The balance sheet also looks quite healthy, and they are sitting on the highest ever reserves and highest ever fixed asset. The cash flow is also good for the company, but in the last quarter it is negative. And in the last con call, management has said that they're working on improving the cash flow. Cash conversion cycle is also not good. And when I will go to the con call, I will let you know the plan what management has detailed out for improving the cash conversion cycle. As I explained earlier, of all the promoter holding, 44% is placed, which is not good sign. But few things to note over here is both FII and DII have increased the stake over last 3 to 4 years, and the public holding has reduced. And in public holding, approximately 5% of the stake is held by Reliance, which is definitely a positive sign. This is what screener was showing with respect to its competitor, but I will ignore this slide because they are not actually competitor. Next, let us discuss few of the pointers from the con call, and I will highlight few of the things that they have said in the con call, which looks quite promising. The first thing is with respect to the transformative change. What they have said is Indian telecom sector is going through a transformative change because of the proactive government initiatives, which includes BharatNet Phase 3 and PLI scheme. Apart from that, things like promoting semiconductor manufacturing in India will fuel the long-term growth for the telecom sector. And things like 5G network and FTTH will again improve the overall revenue for the company. In terms of new product, as I said, like they have three R&D facilities and they have like world-class R&D facility. So they have launched the first made in India 5G fixed wireless access customer premise equipment portfolio, and they have already received order of approximately 6 lakh equipment. And this I have already explained where they're planning to migrate from service to product. Right now, the company is sitting on quite a high inventory. So that is where the question was asked with respect to the high inventory. And they have clearly mentioned that all the inventory will be cleared in the coming quarter. Next, the question was asked with respect to defense product. And they've already launched quite a few products in the defense segment. One of the product is fuses, where they have already received inquiries for the lakhs of fuses. The other product being radio relay and ground surveillance radar. Next, the question was asked with respect to margin, and they are quite hopeful that the EBITDA margin would be between 15 to 17%, which is definitely positive. The other question was asked with respect to the less sales in the OFC segment, given the management is quite bullish. So for that also they have given the justification because of the geopolitical reason and overall recession, the demand was less, which will improve over the coming quarter. And as they're planning to go with 1400 capex in the next 3 financial year, the question was asked, will the capex lead to high debt? So they have clearly mentioned that it will not impact the debt to equity ratio, and they've already funded all the capex through internal accruals and equity raise. The next question was asked with respect to the debtor days, where right now also the debtor days is quite high, and the question was asked, if we increase the sales, will debtor days again increase? So they have clearly mentioned the debtor days will not increase with the increase in sales. Earlier the debtor days was higher because of the service based product, but given they're planning to migrate to product oriented strategy, the debtor days will not increase with the increase in sales. Next, the question was asked with respect to 6G and competitor. So they have already started working on the 6G product apart from companies like Tejas Network. But please do note that the commercialization of 6G is still 4 to 5 years away. Additionally, please note that the HFCL is holding 6% stake in the Exicom, and Exicom is into the telecom and defense segment. So these were a few of the important pointers from the con call. Next, let us do the technical analysis of the HFCL stock. If you see the stock price movement, the stock is making higher high and higher low. And apart from that, the volume has increased over the last few months. And the RSI has also cooled off in the daily time frame. Next, let us discuss about the few of the financial ratio for the company. If you see the PE ratio, the stock is trading at more than 5 and 10 years median PE, and same is the scenario for 3 years as well. For price to book ratio also, they are trading in the higher range as compared to 5, 10 and 3 years median price to book ratio. So this is one reason why at this point of time I am not willing to buy HFCL stock until it comes to my buying range. This is the last section of the PPT where I will discuss about the analyst coverage and my take on the company. So Ventura has given buy rating for the company with a target price of 163 rupees on 12th of June 2024. And apart from that, they also covered it in 12th July 2022 and that target has already met. Next, let us discuss about my take on the company. I am a net buyer in this company and my first buying price would be approximately 112 rupees, next 92, and the third buying price would be 64 rupees. In terms of target price, the first target price would be 160, the next target price would be 220, and if everything goes well and if management is able to meet the guidelines, then I will hold it for long term. Apart from that, if you are holding the stock from the lower level, please stay hold. And additionally, if you want to average the stock, you can average the stock when it reaches to these buying levels. Thanks for watching the video. If you have liked the video, please do subscribe and share with your friends. Apart from that, if you have any questions, you can ask in the comment section. Thanks for watching.